Hey everyone, John Henry here, slingshotfutures.com. Welcome back. I hope you had a fantastic day of trading today. Hopefully you didn't get too stuck in that big bear trap that happened at the lows. I know I got stuck for a little while, but we managed to get our way out of that one pretty unscathed. Actually, it turned out to be a really good trade. But going in, what we're looking at today is the S&P on the 60-minute chart, and we're looking for zones of interest, right? Trying to figure out what the heck is going on with this thing. We've been massively bullish since the beginning of January, right? And what we can do is we can see that bullishness is starting to maybe weaken a little bit. And I say maybe because, well, let's be honest, every time it looked like it was weakening, the market shot back up again. So I don't want to fight the river too much. But what we're looking at here is we started off, right, with a more simplistic view. And don't get caught up with all the moving averages and the indicator this and the indicator that, blah, 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 blah. Zoom out and keep it simple, right? Keep it very simple and just look, what is the market doing, right? From that standpoint of a simplified view, at least, we have a situation where we have that really, really strong move to the upside. The pullbacks were microscopic, barely any pullback inside of there until this. Right now we're starting to see where buyers actually began taking profit. We see the buyers who maybe bought down here, or heck, bought the breakout above the highs. It didn't really matter. But we finally saw some sentiment from the sellers. Now that doesn't mean the sellers are taking over. But what it does do is it gives us something to use. Right now, if you haven't watched the repetitious patterning video yet, make sure to do that. That's also a much more in-depth one in the course material for you members out there. So make sure to watch that. But this gives us an idea of what the sellers are capable of. So we can take that sell move and we can create a repetitious move and see if the market's following it, right? And here we have the next pullback after the market goes back up to highs. This time around, the sellers really, they came close, right? They came close, and that might just be close enough, but they did fall a little bit short of that. So buyers are showing that maybe they're getting a little bit more aggressive in here. Could have been maybe a shorter term channel, something along those lines. However it worked out, we know that buyers were a little bit stronger than the sellers, not allowing the sellers to get as big of a move, and then we break out to highs again. So we can use this same repetition and see, okay, well, what about the next pullback? The next pullback, same situation. They came close, and maybe close is close enough, but the buyers are still aggressively buying it. But here's the difference. This is where things start to get shaken up a little bit. Because previously, when we were breaking out above highs, we were shattering them, right? It broke out and it never came back. This is the closest it even came to that previous swing. So when we're breaking above the next one, what happens, right? They break out, sellers try to take it, but they fail to get any breakdown, and the buyers swarm back in again. This time, though, we formed a double top. Not very good for the buyers. And when they finally did break above it, they held it as support, and then we came tumbling back down again. That's really bad, right? That's showing us, well, I say really bad for the buyers in the sense of buying high, hoping it goes higher, which, to be fair, through all of this and all of this, you could get away with. You can kind of cheat the system because it's such a strong bull trend that you can just kind of close your eyes and hit the buy button. But now that we have buyers who are probably stuck from up here, right? They tried to buy the breakout, assuming that this trend is going to continue. I doubt many people would have argued with them until it started breaking lower. So very likely, a lot of those buyers are stuck from up there. And we can use that to our advantage, right? If we know where people are stuck from, well, we know generally what they're probably going to do. When people are stuck, usually a little more predictable. So what do we see here? Well, we see the buyers gave up buying high. Didn't work. Right? That happens. The trend eventually will come to an end, and we started pulling down. Now, that doesn't mean that the bull trend is over by any means, but it does show that buyers no longer want to buy high. They want to buy low, right? They want to buy the cheap. Buy it when it's on sale. Well, where is it on sale? Right? If we're looking at this from a progression from the bottom, buyers who bought down here, or maybe even bought this pullback, their stops will have started here and then probably moved up to there, and then probably moved up to here. Well, put yourself in the shoes of a hedge fund, right? Hedge funds don't just go in with one contract. That's not how they work. They go in with hundreds, potentially thousands of contracts. Well, you can't just drop 1,000 contracts on the market. That's not going to work. That's going to make the market go bonkers. So what do they have to do? Well, they have to mask the orders a little bit by utilizing other people's stops, right? These are what I call dummy stops. This is a bad spot for a stop. It's not good, right? You don't just drop a stop underneath a major swing when you're looking at a very strong trend, because guess what's going to happen? All of those hedge funds that need to mask their thousands and thousands of contracts, they're going to do it straight into your stops, right? So if they need to buy 10,000 contracts, Well, they're probably not going to buy up here. We already know they're not buying here, otherwise this wouldn't have happened. They're buying the lows, right? They're buying the swing lows. They're buying the traps. They're buying where all of the other people are getting whipped out of a really great trade. They're using that to their advantage to sucker them out. And then they can basically just accumulate the orders and gobble it up like a sponge. So they sponged the orders down below the lows, and now we have a rally back up. Well, what's the objective of the buyers that finally got the rest of their fills? Where are they looking for to begin taking profit? Back to the highs, right? Remember, this trend is beginning to weaken. Buyers who are buying on the dip aren't necessarily expecting this explosive new high because it's probably not going to happen. What we're more likely to see is the market come up and hit, 28 and a quarter up to the highs, and the highs are, in this case, a little bit further to 37.50. But inside this zone is where those buyers are going to begin taking profit. It's plain as simple as that. So knowing that buyers have bought down here, it was a stop run, and that stop run was eaten alive. The objective for the buyers is back to the highs. Now, it doesn't mean that they're not going to try to hold on for that little bit of icing on the cake, but what it does mean is that if they're floating 1,000 contracts, they're going to begin liquidating 800 of them, 80% or so, in this area. In that way, if it does not continue and fails back lower, they've already banked the profit, and if it does go higher, they've got some icing on the cake. So this is the zone that's really, really important right now between 28 quarter and 37.5, because if the buyers can't get that breakout to the upside and we fall short, especially if we get stuck on 28 and a quarter, then we're beginning to show signs of a transition into a range. And the range looks best right now between 28 quarter and 10. Now, one other thing to consider here as well is the potential of a nice little spike in channel. We have this big spike to the upside. Now we're looking for some channeling. Right, so we have the nice little channel forming right there. We'll draw that on the highs, nice and easy. And here we can see the similar structure just tilted sideways. They try to break above the highs, they hold it, they try holding it, and then they lose their grip. And that's where the pullback takes place. Same thing on this horizontal range. It's just a trend channel flat. Right, that's all it is. We try breaking higher, and they fail, and then they dump all the way back down again. Right, the same thing that happened over here is probably what we're looking at over here. We're looking for a launch back to the upside. But when we start getting up to those highs, that's where those buyers are going to start peeling off profit because they're not anticipating this to go flying through the top. If anything, it's rounding off. So we could even end up with a lower high. This market's so bullish that that's probably not the case, but realistically, I don't think they're going to be looking for much higher than 37.50, maybe into the 40s, and that's about it. Now, looking at the overall move from a percentage basis, the largest pullback that we had in the sequence was this guy right here. Right? And that was a 25% pullback to the tick, 25% pullback. As we go further, we can see that this equidistant pullback did line up really well with the lows of the range. They did pierce through it a little bit, but that ended up just being wicks and failures, and now we're going back up again. Everything's still pointing to the upside right now, for the short term at least. But that also tells us that if we start losing ground further than 25%, right? So the biggest pullback that we've had is 25% over here. Well, if we continue that drawing to the upside, just eyeballing it, 25% would be right around there, right around the 3300s or so. Which means that if we start breaking through the 3300s, we're now breaking down from what the market should have been doing. We're no longer carrying out through higher highs, higher lows. Now we're seeing higher highs and lower lows. So it's very important to see what happens up here. And if we start cracking down even more below 3300, then we're starting to look backward and saying, well, wait a minute. We have a spike in channel here. What's a typical spike in channel move? We have the spike into the channel, and the channel is in the direction of the spike, right? So this is tilted upward. What we're looking for is the market to come back to the lows of where that channel started, right? And that's all the way back at 3260. So if the buyers start losing their grip below 3300, there's a very good likelihood that we start turning down towards that 3260. And that's where the buyers have to show up to the party, because if they lose this, it's a wide open door, right? They didn't leave much structure behind before taking off. So if the market does retrace all the way back down here, we could be looking for pullbacks all the way down to the low 3210s before we actually find any support. Obviously, that's a ways off, and we're currently raging to the upside. But what we're looking for here going into maybe tomorrow, maybe even going into Monday or Sunday afternoon, is for the market to rally back up into these 28 quarters to 37.50s, finding where the sellers are coming in, and if they're coming in near the highs or at the highs or maybe even slightly below it, could potentially look for some selling opportunities to drive the market back down again, with the assumption that buyers aren't looking for a big new high. They're just looking for a shallow new high or even possibly a lower high, and we start transitioning into this range. So if this range holds true on 28 quarter down to 33.10, then we're probably going to be stuck here for a little while. And even if it does break out, we need to see that follow through. And if they can't follow through, same thing that happened over here is probably going to happen over here. But that, if that happens, that's going to be the second time they failed, and that's where we could start kicking off that larger pullback. So we are beginning to transition a little bit more into a range. We're a little bit more sideways, finally seeing a little bit of back and forth action on the S&P. We're getting some of these bigger swings up and down, which is what we've been sorely missing for a while. So we're going to be coming into tomorrow probably with an upside gap towards the high of that range. And if we start seeing sellers immediately coming in off of that open, we might have our clue in terms of what to expect tomorrow going into the weekend. But that's what I'm looking at on the S&P for the 60-minute chart. We've kind of structurally broken away from what we have been doing previously, and usually when that occurs, we start seeing signs of a range. Now, one other big thing that happens when you start transitioning into a different type of trend, in this case going from up to sideways, you usually see what's called peak volume or blow-off volume, where you have this really big move to the upside, there's a gigantic volume burst, and that gives you a clue that the high is very likely close. Doesn't mean it's in, but it means that it's potentially close. We haven't had that peak volume, and the only big volume that we saw was when they were trapping the lows. No surprise. Buyers gobbled up the stops like it was candy. So we're not seeing any peak volume or anything that could potentially shut this down, but that might just be the case if we get a big blow-off on the highs. That might even be nicer to look for a possible short. Either way, as it stands right now, we're looking to buy low, and we're looking to sell high in the range, whether it's high in this range or high in a blow-off on a peak volume type move. Or, if it does start breaking down, we're looking to buy much, much cheaper down in the 3260s. You might be able to find some structure at around the 3285s, but really, I think the big one is going to be around those 60s. So that's what we're looking at going into the next few days, possibly in the next week. Hopefully you find it useful, interesting, maybe something you can add to your tool belt to keep an eye on. Right now, buyers have their eyes on the highs of the range or the highs. We'll see if they can finish the job today, maybe into tomorrow. But that's going to do it for this one. If you have any questions, shoot me an email or drop a comment down below. jbrink@slingshotfutures.com. Don't forget to like and subscribe to the channel so you don't miss anything important. But otherwise, that's going to do it. So I hope you had a great trading day today, and we will see you all tomorrow. Thanks.